Hey, Mark. All right, you guys can start. I got about 3 or 4 minutes. I got to do something. So you guys start, and then I'll be right
Okay,
back. Just take some questions that don't require charts.
sounds good.
Give me just 1 second.
And go ahead and raise a quick hand, guys. You're hearing me okay? Hearing Brandon okay?
Yeah, I'm checking my microphone. Check.
All right, just going to see what a few questions here. Yeah, again, Mark's going to come back in, just sort of discuss the DIA short and how he thinks about so that handling that position. Looking for one without charts specifically here. Most of these are chart related, so give me a sec. Vikram's asking what positions we currently holding. We've got a number on, still have some CCJ, have NVIDIA, have QLYS, have a small position in Coin, Axon, actually own ARM as well. So we've reduced exposure a little bit. I know we get that question, it seems like every minute. But yeah, we similar to the platform, just used some of the strength and nailed down some profits because this pullback was pretty well telegraphed. Mark, are you back? Is that what I was hearing?
Yeah, I'm back. So I just want to talk about a few things. The DIA short, which I don't want people to get too hung up on this because it's just one trade, and I want to talk about how I make these trades. And sometimes I make very large bets when I do this, but it's from a very very low risk standpoint. And then maybe you guys could talk about that too, and also just talk about overall kind of Mark. I mean, really, this is sort of real standard operating procedure, right? I mean, everything that we've done here, the way the breakouts worked and these stocks ran up, between single digit, decent single digit gains, double digit gains. We had a few that were up, pretty nicely. Selling a portion of them into strength, financing the risk, holding the ones that are acting, the best, and the ones that get extended, selling them out, trading around the positions. All this is just sort of, any different than you've been doing for your, entire career.
No, yeah, no, classic would sort of be the best way to describe it.
Yeah, and this is why,
Textbook.
yeah, textbook. It really is very classic and textbook, and this is what we wait for, and this is the type of environment where, and again, this could be just the beginning of something that, continues for many months if we go into a bull market or we stay in this bull market. I think we're in a bull market at this point, but we stay in this bull market and it lasts for a while. But we're prepared if it's not, we're going to certainly have our stops, move our, improve our worst case scenario. Um, so again, this is why you don't want to get yourself, and I know, many traders through the tough markets, they get antsy and they can't sit on their hands, so then they go and they trade, they get themselves in a hole, and then when this type of opportunity comes along, they're either scared to to get big in the market and to take advantage of it, or they take advantage of it and they all they do is just dig out of a hole. And if that's the situation you're in, okay, you need to learn from it and then move forward, and you might have to get in sync with another cycle. It takes time before you get yourself where you're profitable again, but just be patient, learn from that experience, and then you'll get another opportunity, and you'll get times where there's great opportunities where things work even a lot better than this, because this is sort of a garden variety, a decent market. You see, I haven't even moved to, an easy dollar environment, which we could look at hindsight and say it's been a fairly easy dollar environment. But I think as we're getting extended here, we're certainly vulnerable to a pullback. Let me just talk about this DIA really quickly. And the way I'll do this is that when the market gets extended, like when I'm talking about like the Dow, I shorted back in 2021 off the highs. There was a number of times that I shorted the market, and usually when I'm shorting and I'm shorting heavy, it's in the indexes. It's like the SPY, the DIA, because these are very liquid. Just I'm not going to get a gap of 10% the next day against me. Although you might get a gap, it's probably only be 1 or 2%. So there's a degree of safety there, and because of that, I'm willing to go sometimes my entire account or 50% of my account, certainly 25%. position would be, would be normal to maybe even a 50% position. And sometimes what I'll do is I'll just hedge out, the portfolio. So if I got a bunch of longs, I might even go, this is something I haven't done in a while, and I wouldn't do now because I've got enough capital, I don't need to do it. But back in the day, I would actually go on margin. Instead of selling my stocks, I might short the market, sell the extended ones, and then the rest that I'm holding, short the market, still maintain a fully invested position, but short, maybe short 50%, and I'm 150% exposure, but 50% net long. In this scenario, though, when I short off the highs and I use these real micro stops, I do that because, first of all, I want to take a real big position. So, and just we do the math. So let's just say you put 50% of your entire account short, but you had a stop of of a 0.5%. So now you're only risking 0.25%. You're risking a very small amount. Now you try that a few times, and maybe you get it wrong, like you saw. I got this wrong a few times. It looks like this time we might have got it right. Sometimes it takes 2 or 3 tries to get it right, and now you've racked up a loss of maybe 0.75%, 1%, and you're only risking 1/4 or 0.5% of equity. So it's a very low risk trade. But because you have a big position, when you get it right, and usually what I'll do is if it starts moving in my direction, and then I'll double down and I'll add to it with the same type of very tight stop on that next position, or I'll add and reduce and add to that position. And now I've got this big giant position with this very low risk, and it only has to go down. If it goes down, 3, 4, 5%. Now I'm adding that big number to my whole overall portfolio. I only do this on rare occasion. Like maybe, I might do it once a year, once every couple of years, maybe a couple times a year. It depends. It has to sort of, show itself in the form of the market gets really extended. You're getting, the sentiment is getting very bullish, and the put volume comes way down. That's usually sort of the 3 steps that I'm looking for, the 3 conditions. Sentiment right now is up there. It's not at the real nosebleeds, but it's up there where we can definitely, get a pullback from. And that put volume came way, way down. And that's where when you get extended and that put volume gets real, real low with the sentiment, that's what people are saying and what they're doing, and the market's extended, it makes it vulnerable, and it becomes a decent reward risk play. So that's basically it. I mean, not a whole lot really to it. And then what I'll do is, as the market makes a new high, as it starts to come off, I'll short in that direction, just as it starts to come off, and then set a stop just above that old high. The other thing I want to point out is that, as you heard me or you saw me post, that I require the cash index and the underlying ETF to both stop out. And the reason why is because a lot of times you'll get where the cash index will not go into new high ground, but the ETF will. It'll stop you out, or vice versa. And I find you're not risking a whole lot more by requiring the 2, but it's just a little bit more confirmation that the market has indeed made a new high and taken out that high. And the cash index is even more important, but if you're in the DIA, of course, that's what would stop you out, and that's what's creating your loss. So I require the 2. That's something I've learned over the years. I've done better by using that stop, with requiring the cash and the ETF both. And that's about it. I don't know if there's any questions on that.
Yeah, there was actually a good timing, Mark. There's a specific question. Martin's asking, why short the market while holding individual stocks long? I get the risk reward is good, but if the short makes a profit while the longs get stopped, isn't that a net wash? Or are you counting on individual stocks to perhaps not hit their stops, using the DIA short as a hedge just in case they do hit stops?
I'm going to make it very simple, and Mark, Richie, and Brandon would tell you the exact same thing. We're looking at each individually. We're not literally thinking of it as, oh, I'm shorting this to cushion the stocks. It by default becomes a hedge. Obviously, if you're short and you're long, you're hedged, right? But you could lose on both. So I'm not necessarily putting this on to cushion my longs, but it may have that effect. So we're making the decision, everything on its own merit. So if we're holding a particular stock, we're holding that stock whether or not whatever we think of the market, it's a separate decision. This short is on the index is a completely separate decision. Whether it had no stocks or fully loaded with stocks, it still stands on its own feet as I think it's a decent reward risk play. I believe the reward is 3 to 5 times to 1. Even if I were to get knocked out of it 2 or 3 times, I usually base it on getting knocked out between 2 and 4 times of actually missing it, being wrong. 3 times and getting it right, only 1 out of 4. And then I do the math. I say, okay, well, what's the downside here? Okay, it's 4%. After 4 tries at this weighting, I'm going to lose 1%. Oh, that's 4 to 1. That's how I look at it. Now, that's theoretical. It's not. There's nothing. I'm making an assumption. So this has to go down 4% to be a 4 to 1 to a 1% stop. Even if it went down 2% and I had a 1%, I'm still 2 to 1. If I'm right 50% of the time, it's a moneymaker, right? So, and it may seem small, but again, if you put you put $10 million into it, it's your whole portfolio or whatever the number may be, it could be 3% is a 3% on your whole account. That's a pretty big day. I look to get on good days 1 to 2 to 3%. 3% is actually kind of big, but 1 to 2% is what I want to move my whole portfolio on good days. Yeah, so that's it. I mean, it's very simple. I don't know, Mark, would you explain it any differently? I mean, that it kind of
No,
goes on
I
its
mean,
own merit.
yeah, and I would just say too that, and sometimes I don't do a lot of the shorting. It's funny. I think the first attempt, we didn't take, and the second attempt, it was like, this is really getting stretched here. But I was just going to add, there've been many. Time frame is the other issue. If this pulls back to the 20-day, you've got a 3 or 4 to 1 based on those stops. Well, that's normal, guys. So you could easily sit there with a short-term trade inside of some longer-term swing trades. And that's kind of how I think about it. Yeah, if it stands on its own merit, you consider putting it on. The same with any trade.
Yeah.
So, and I've had periods where, yeah, like Mark was saying, I've lost on both and made on both, just like in any other trade. So
Yeah.
don't overthink it. And definitely don't dig in with an opinion on the overall market because you're taking a short-term, short that's counterproductive.
Yeah, forget about that hedging in the traditional sense where you're hedging against your portfolio. Just look at each trade on an individual level, and would you make that trade on its own? And that's really, is what dictates at least my trading. That's what's dictated my trading for the last 30 years, and it's worked for me. So, and again, I think if the market's really strong here, you'll probably just get a move down near the 10-day. You'll probably undercut the 10-day and you won't get all the way to the 20-day. Like it'll come down maybe between the 10 and the 20, and that'll be it. Which still would be, probably 2, 3, 4% off the highs, and it still makes sense. It's a micro trade though. It really is. This is a really kind of short term, just micro trade playing for a little pullback here. But this is what allows me. Here's the main thing I want to leave you with. I'm not going to go into an individual stock, at least unless it's even if it was a big name, even an Apple, I'm not going to go in there and put my whole portfolio into one stock because I mean, anything can happen with one company. You could get some, the government decides to put an antitrust case, bang, next day the thing's down 10%. But with the overall market, I can go in there and take a gigantic position, stop out really tight. We're talking about penny spreads. So this allows you to take a big position and sort of get the same effect, play this micro move and with this micro stop and get the same effect as if you were taking a smaller position in the stock and it made a bigger move. So my goal is always to just get to my goal, whatever I have to do to get to that return with the least amount of risk, always thinking of the risk first. And this is the way where I'm able to, and the key is I always want to be able to lever up. I want to be able to get big positions on, big exposure, but do it quote unquote safely with risk financed or with liquidity. So that's the challenge. And this is one of just one trade that you could do that with. I would say though, if you don't have experience and you haven't been trading for a while, I would completely stay away from shorting altogether. And trades like this, I probably wouldn't even do. But certainly they're very low risk. So if you were cutting your teeth and you're shorting the indexes with a 0.5% stop, that at least the risk isn't big. But of course, you can get death by 1,000 cuts. And that is the thing that you have to realize is that these these very small stops are fine, but your timing has to be impeccable. That's the thing. You really got to always trade in the direction of the trade as it starts moving in your direction, and then stop out very quickly. They don't work unless you're timing the move, because again, 0.5%. Any stock index is going to move 0.5%. So if you start going against the trend and it's selling off and you try to bottom fish, now the likelihood that you grab the exact low just when it turns around is very low. Usually it'll go a little bit lower and it'll knock you out. That's why you've got to go in the direction of the trade, and your timing has got to be impeccable. That's the trade-off there. So you will get stopped out a lot of times if your timing isn't, even me. I'm usually on these, I'm almost always, it's funny because even when I wait, I was just talking to a friend of mine who was saying I'm always a day, 2 days, sometimes 3 or 4 days early. But a lot of times when I'll look at these and I'll say, okay, this is right where I would short. And I say, well, I'm always 2 days early. Let me give it 2 more days. Then it goes up a couple more days and I short there. And then it still goes a couple more days. It seems like no matter what I do, I'm always early. But so it takes me a few tries. So I sort of bake that into the cake and just say, okay, this has to make sense with me getting stopped out at least 2 times. And again, if it doesn't make sense with you getting stopped out a few times, then these really tight stops, don't do the trade, because it's requiring just too much perfection. Now, if that makes sense, I don't know if that makes sense.
Yeah, I think well said.
So anyway, anything else? Because I know this is your Q&A here today, so I was going to let
No more specific ones on the index short that I see.
Okay. All right. So that's it for me. I'm going to go back here to doing my work, and you guys can continue. Maybe you go a little longer here because I took about 20 minutes.
Okay, sounds good.
Go an hour from here. All right. Talk to you guys later. Bye-bye.
Give me a second here, guys. I'm going to do screen sharing. Okay, seeing that okay? Hold on here, just bring the chat box back up. Some questions. First question was on this SMCI. Right here, guys. Give me one more second. This came via email saying there seems to be a VCP pattern looking at a pivot of 320.62 with a stop of 301.08. I'm guessing you're looking 320.62. Oh, I see. You're going to use this day's high. Yeah, I would say, SMCI is sort of, it's on watch. We talked about this before. This was one big winner early in the year, and then it had this huge, biggest down week since the beginning of the move on the biggest volume. And you can tell, like we talked about, every time it's been brought up, that's sort of weighing on the name. This is the weekly. And trying to set up a right-hand side. I'd like to see it tighten up more. Yeah. I mean, could you play it through, sort of using this one day's bar as a pivot? Yeah, but I don't think, it's it just needs a little bit more time. Mark's pinging right now saying, if it continues to act well, we're going to put it on focus. It does have really good relative strength. This is one of those situations, where it just built a base, had a huge move, it needed to digest that big move. If it tightens up here on the right-hand side, mobilize another one. Mark was saying, I have that on secondary watch as well as another one potentially going to go on. Also had a question on this KOP. Someone is asking, bought it on Monday because it had a good VCP pattern, high volume, and looked like it was on the verge of a breakout. Next day, went up 7%. It's about to reach an all-time high. I wanted to know what you think of the stock. Monday was right here. So you're buying it on this day. Yeah, I would not. This is not the best for a variety of reasons, in my opinion. If you're drawing the VCP here, see how this is. I mean, you do sort of have these tightenings, but when you look left, this really would have been, if I was going to try and play this name, maybe would have tried it here, but I just think it's a little bit sloppy. And this buy point here, just doing some measuring, 46 down to, I mean, even to this level, you know, it's sort of, it's just, this is not a well-formed right side. You know, I don't know, Brandon, anything you want to add to that? I would, yeah, that would be the biggest thing, is to say that this right side just doesn't have the look at all.
Yeah, I would say this just looks like it's kind of a forced trade at this point. Would like to see, yeah, to Marky's point, a right side develop right where that last line he drew there. But again, this is in the chemical space too. So
yeah, I would add that I think, you know, look, this is a good example too of you can buy anything, and if it works, you know, sort of the ends doesn't justify the means. And my point would be, buying right sides like this, in my experience, is just, if you consistently buy right sides like this, I don't think the expectancy is going to be very high. Jeffrey's asking about IoT, saying it looks good or looks real good. That I don't know if that was a question. This is a name watching to see, you know, this is sort of a big primary base, came out on really good earnings, and the fundamentals on the table here do look quite good. Triple digit earnings, good sales. So look, if we can build some type of a, you know, right side here, yeah, I'll really would be interested. Let's see, Michael's asking about Trin. Bought on 1120, had an RS of 89, although it's acting fine. It's now down to an RS of 79, so I wouldn't even show up on my screen. Do you stick with such a trade, or would you consider selling it right away? Once I'm in it, you know, look, we talked about this one too. We said it was lower RS, so you're correct. Assuming you bought it here, this is a proper buy point. It was really tight here. You know, most likely on a lower RS type situation, and with it being this tight, I probably would have de-risked into this first move, maybe, because, you know, assuming you use the really tight stop here, you know, you're just looking at it with my eye, you're probably at a 2-to-1 in this first move, thinking I'm not likely to play a laggard, say, for a bigger move. But no, it's the name isn't doing anything wrong, so I'd stick with your plan. And certainly I wouldn't sell it just because, look, with the RS is going down when the stock is breaking up, just means the general market is doing a little bit better than your name. But that's not necessarily a reason just to sell it. That would actually be a reason for me not to buy it in the first place. But it would not bear on whether or not I'm going to stick with the trade or not. George is saying, would you say improving worst case scenario for MMYT is moving the stop just below 43 on December 7th? And follow-up question, do you always improve worst case scenario only when you're at a multiple of your risk? No, I'll answer the second question first. No, you don't have to. You can always improve your worst case scenario potentially. It doesn't mean you have to be at a multiple of your risk to do so. And he's asking, yeah, below this low. I think that's fine. This is where you have to ask yourself, you know, moving it to this level, might it undercut that, especially if we get a pullback in the general market? Yeah, it might. But if, you know, the give back, you know, is either the way I would have, you know, preferred to handle it is, if you're worried about the pullback, was, you know, de-risk the trade up here, take a portion of it off into this run. And I know some of you say, well, I wasn't at a, you know, maybe a 2R yet. Well, that's the trade-off. But this stock isn't doing anything wrong here. So yes, you could easily move it to break even if you want to. Just know that, you know, the likelihood of it, you know, pulling back to that level, especially if we get a general market pullback, is a little bit higher. But if you don't want to, you know, take any more turns, or you de-risk the trade in that way, I think it's a fine, you know, candidate to do that with. IMVT, Kelly's asking about. Bought it December 12th, reduced to 19th. Yesterday stopped out when the stock gapped down 12% when a rival company had bad clinical trial outcomes. Yeah, I had this one teed up myself, you know, sort of on watch yesterday, and then saw it was gapping down. Could you critique the buy, sell, and rate the setup? Let's see. Yeah, you bought it perfectly. You know, it looked like it gapped a little bit. And I sort of remember this one. Did we have this on focus, Brandon? I can't remember. I thought either we were going to, and then we highlighted, or we didn't. I remember because it kind of came out quickly. I think you bought it right. I think you handled it right. says you reduced on December 19th. The reduction actually doesn't make a whole lot of sense to me, unless maybe you were reducing at break even or something like that. Because really, until this gap down, the stock was not doing anything wrong. And yeah, like you said, this was some type of a headline, based on a drug. And look, it's a biotech with no earnings. So, in those situations, that's where you have to position size accordingly. Because even news like that, they can be more volatile. But look, your buy point was exactly where I'd be buying the name. John saying, can you compare your portfolios before and after the 12/20 sell-off day? I'm assuming you're referring to yesterday, such as percent invested, position changes. Trying to understand whether I over underreacted. Yesterday, I sold a bit of mildly profitable positions to reduce exposure. And today, due to lack of a strong rebound, I sold a bunch down to less than 50% exposure. Well, yeah, look, John, I can't tell you that because I don't know each one of the stocks, you have and how much your overall exposure was or how much pressure you were feeling. But, like when Mark was on earlier, we were saying this is really kind of classic where as the market gets really extended and stocks that you hold are extended, you just have to make some decisions. You either take all the profits if you're a shorter term trader, or you de-risk to the point where you're comfortable. So it sounds to me like what you're saying is you were uncomfortable, or maybe had more exposure on than you were comfortable, and then just started taking things down. Look, and I've said this a number of times. If you start feeling more pressure than you're comfortable taking, then you have to start reducing risk. But I would not just because the market's pulling back here, guys, I would not just abandon, your plan. So in reference to sort of what we did, and Brandon, you can comment on this. We did a combination of exactly what we just said. We reduced some names, we sold some names, but we didn't abandon. I didn't just randomly cut names just to cut them. So it was, just sort of looking across things, saying, hey, what's extended? What do we want to potentially hold? And then going stock by stock, position by position.
Yeah, and I will comment a little bit on that. Just, this is why it's so important or helpful to sell into strength. Sorry, you guys getting an echo when I talk? Yeah, there we go. So it puts you in a stronger position when the pullback does come, because you've already booked some gains. You've sold you've kind of, like Mark said earlier, you've reached your goals on a few positions. So therefore, when something like a yesterday happens, there's not much to really do because you were already kind of prepared for it, and you don't want to just overreact and start selling things that are acting normal. Because who's to say how long this might only be, a 2-3 day pullback? We don't know. And things might come ripping back. So you don't want to just dislodge positions that you hopefully got in on the right entry point, coming through, tight pivots. Because then you just kind of overreacted and put yourself in a worse position, because now the stocks you were in potentially take off that we're not doing anything wrong.
Yeah, well, I mean, a lot of really great points there. Here's the other thing, though, guys. Listen, if you've never been through some of these cycles, the more you go through this, the more comfortable you tend to get, or you realize, what's normal and what's not. You don't want normal price action to knock you out of a stock, at least if your plan was to try and hold it. Again, this is where, too, if you're just a short-term trader, you take the gains and move on. And more importantly is sort of how I'm thinking from here. I would love to see a pullback in the market that is, mild and then produces a lot more pivots, because I'm going to look to get even more aggressive. I'm going to lean on some of the prior gains if we see, say, another wave of ideas. That's just precisely how, we like to do things. George is saying, I was having a decent run until a bunch of names I was holding started going down. Found multiple instances of names over the last month where I sold half it up 10%, but ended up breaking even on the rest, messing up my win percentage and therefore my ratio. Well, we shouldn't have messed up your win percentage. I would think it would have affected the ratio more, because a winner's still a winner. It's just not going to be as big a winner. Have you been having the same experience? Is this a product of the orange stem model? Listen, the orange stem model is just sort of where are we in terms of the ease of the trading environment? And Mark alluded to it. We've sort of gone back and forth because I had said a few weeks ago, hey, I think it's green, and Mark was saying, yeah, well, with the market extended, you should be asking that yourself. So it sounds like what you're saying is, yeah, you're sort of having more intermediate, getting some traction, but not full easy dollar, if you will. It's depended too upon what names you've been in. We've had a number of names that really worked, and others have pulled back a bit more. And we've had some numbers in doing really well. So yeah, I would say it's sort of par for the course. And there will always be periods where it feels like you're not in the better names. And as I've said before, 3 months ago, there was hardly anything working. So there's been a stark shift in character, at least in terms of lots of names I don't own or trading are still working, and that's a good sign.
Yeah, I'll just add too on the whole just changing character. Well, this week we had what, PGTI break out or gap up on buyout news. We had CRNX come out on good biotech news. It's like, I mean, in 3 months ago, that was all negative stuff. Meaning like stocks were breaking down on any type of news, even good earnings reports. So it's like we're getting definitely some positive action here from names that we haven't seen in a while.
Yeah, without question. Let's see. Robbie's asking about CRDO. Can you grade my buy? Does the setup seem valid in your eyes, or does it look like a forced trade? Well, listen, it was on focus because we thought it was potentially close. It was a little short.
Looks like you bought it all for
12.15. Okay. Yeah. If I was going to play this name, I probably would have bought it yesterday. Yeah. At 12.15, this name is just sort of wedged up. And there's just been no pause. Now we're sort of, it's pausing, pulling back with the market. Contraction seemed pretty tight around 3.8% when measured from the 12.15 to 12.18. I'm a little maybe he's saying, oh, he broke the high. Okay, no, so he did buy it yesterday. It looks like. Yeah, if you're going to play a short little pivot like this, then this is how I would do it. And this is often what happens when you play short little pivots. It just needs a little bit more time. And then he's also
that's a tight pivot. I see what he's saying. He's saying that short.
Correct. He's also asking about Rambus. Can you grade the pullback buy? I entered today on the break of yesterday's high. It looks like Rambus pullback by the low cheat area. Actually, looks like a cap pattern is trying to form. Yeah, I don't like this pullback buy. I'll tell you why, because there was no sign that this was bottoming. It closed on a dead low. So I will not really, I can't think of a time we've ever played a pullback buy like this, Brandon. So I see what you're looking at. If this had closed near the high, then yeah, there's signs of sort of support there. That would be the criticism. Yeah, Rambus is another one. You're right. It is trying to sort of set up this right side. I think it just needs to tighten up a little bit more. And that's precisely what we want to see. So let's say the market, we pull back to the 20 and a name like Rambus, just does this. Maybe we get a 1-2 week pullback. And in the intermediate, Rambus just kind of marks some time, goes sideways, and tightens up, maybe ideally into the 70 level, and then comes out. That looks much more well formed in my mind. That there's a 5-day pull, or sort of pause and pullback that could coincide, with the market, maybe moving sideways. I'd love it though even more. Let's say the market pulls back and Rambus kind of holds, near these highs. That's what's gonna, cue me in that stock may be ready to move once the pressure of the general market comes off. Mark is asking about NU. Can you evaluate my pullback buy plan for NU? I bought a quarter position on 12.19 as the stock opened above the high of 12.18. Well, let's see here. I'm just trying to understand your buy point here. Like, why wouldn't you buy this? This one is just sort of obvious to me in terms of if you're going to buy this name, you know, or if I showed this name to Mark Minervini, he'd go, well, you bought it on the 13th, right? He would just assume that because it just, you know, that's where your eye goes. That was the tight area. So you said you were buying, I guess you were trying to buy a pullback to the breakout after it turns back up on the 19th. Now, and that's fine. The first question is, why didn't you buy the breakout? And if you really wanted to own it, maybe you missed it for some reason. I think a pullback in this scenario, yeah, this is probably how I would try and get back on board. But then let me caveat the whole thing to say this is an $8 stock. It's a bank. We've talked about this one a few other times, you know. So, you know, in regards to that, I think, and this is, if it didn't just hold here on 12.18, I'd get out. Meaning once it turns back in your favor, I just step right aside and stay really, really tight on it. So yeah, I'm making sure I answer the question. If I'm not,
I'm listening in the back.
I would already be stopped out of this trade if I was in this one. Go ahead, Mark. You want to add?
Yeah, I'm just listening in the background, but you know, once again, you're in good hands with Mark Ritchie. Yeah, he gives you the same answer I would give you, but it also has, you see, it got clobbered on earnings. So you got to think about post earnings drift. And that's, you know, when you get a earnings report where the stock acts well, and then you get some type of pullback, you can start playing that for hopefully some, you know, that post earnings drift where now you'll get that stock to move in the direction of that earnings report. In this case, you got just the opposite. You know, if you're getting post earnings drift, it might be to the downside because it didn't respond too well to that earnings. So you do have some overhead supply to the left also. And the fact that, like Mark said, it's an $8 stock and it's a bank, and now you got clobbered on earnings. You know, I mean, is it really worth it? You know, it's what kind of upside do you really have here? You know, it's not like it's a tech stock or a biotech, so it doesn't. It's just not really worth the risk. But you know, from that really tight area, that is definitely the area that you'd be buying it from. But as Mark said, you got to put it on a real short lease. If it doesn't just work and go, then you just get out of there.
Yeah, and I would add too, yeah, the less optimal, the less forgiving I tend to be. So if you're stretching, going out the risk curve, yeah, I want it to work quickly, like Mark was saying, or I'm just, you know, I'm right out. And I think we even mentioned this a week or two ago when it was brought up, saying, you know, and mentioned almost the same thing Mark mentioned with earnings, and just saying, I think there's just better merchandise out there. Naresh is asking about spot. Is it a pullback buy? You know, I see what you're saying, because you're sort of pulling back to, you know, this prior highs, but it's not really pulling back to, you know, a pivot or a base. And again, I would, if you were going to see, I would like to see a good close yesterday if I was going to try and catch this as it's sort of just turning back up. But no, again, this is just a stock that was short-term extended. Now it looks like it's either trying to form, you know, an entirely new pivot, or it just needs time, and there's not really a clear pivot here.
So Mark, here's a perfect, I gotta chime in. This is just such softballs. Like it's and it's such great examples to build on my last comment. So remember I just said about post earnings drifts and buying, you know, getting that post earnings drift. Well, if you see here, go back to see where the earnings reported, and you got that big gap up, and now it pulled back, it closed the gap. There's your pullback buy that you want to be buying. You're coming out of a base, and you're just after a earnings report that had a great response. You get that nice pullback, and now that's trading near the danger point. I mean, if those earnings are really that great, that stock should just turn around and go right up from there, and you really shouldn't go much lower. And that's exactly what happened. It built that little cap. It finished off the base. You got that perfect, absolutely perfect little drifting down 4-day pivot. So you could have been starting it on the pullback buy. You come back in from the earnings, right? You get the earnings report, comes back, you get the pullback buy. I wouldn't have bought on that first. We went inside, right? We had that inside day. I'm going back to the pullback, yeah, over there. And then you got the pullback buy the next day. Boom, that's where you can start it. So maybe you know, take a quarter or a half. Now it tightens up nicely, and that's where you should be adding. Now, where you're looking at a pullback buy, the stock runs up and then it accelerates its advance, and probably on upgrade or some news now, you know, the news, the upgrades start coming in or whatever, and now it's getting extended. I'm looking to sell into that if I'm a shorter term swing trader. And now when you get a pullback there, yes, is that a pullback buy? Well, you could call it that because it's a pullback and it's turning up, but the pullback buy is in context. It's where it occurs. Anything with a pullback that turns up, you can say is a pullback buy. But that's that's what I was talking about, how the post earnings drift. So this is how we'd play post earnings drift on the upside, and the other scenario, the bank stock, you were buying, you were buying as it was turning up right into an earnings report that was not received well. So this is
exactly the
this is
opposite.
a perfect example of the two contrasted to each other, of what we would want to play and what we wouldn't want to play. Perfect example.
And I'll just add, we put this on breakout alert right here. This is where we were buying the name on 11.9.
I don't remember. Yeah, I don't remember, but yeah.
I mean, Brandon and I were buying the name. We didn't buy it for this was put on focus and put on breakout alert on this day. And I remember this is actually, I think we were in the hotel prior to the gala. I can't remember what we talked about it. We probably should have bought it, for the platform as well. And then I remember we got a question on it when it gapped up, and I was saying, well, look, I'm a seller here. So almost exactly what Mark said is exactly what I did and how I handled it.
Okay, you won't be hearing me from anymore because I'm logging off now. See you guys later. Bye-bye. See ya.
Let's see, another question. We already talked about TRIN. Chris is saying, after struggling in 21 and 22, 23, I've forced myself to be a 2-to-1 trader with an average loss of 9%, average gain of 9%, average loss of 4.25%, just letting the batting average fall where it falls, which turned out to be in the 20s. I managed to turn a small profit due to progressive exposure. Now that I feel like I'm getting the basics down, but still not making much progress, any tips on how to bring my performance to the next level? Chris, you're doing it exactly right. If your win rate's in the mid 20s for the year and you're still up, you're going to do really, really well. So, and I think you're thinking about it right. I like your comment about letting the batting average fall sort of where it falls, because that's what you have the least control over. Exactly right. Now it's continuing to work on progressive exposure and learning how to step on the gas when you're really getting that good feedback. Let's see, Angelo, in November, I chipped up and made some open profits on 4 positions, used profits from a good environment to increase investment on one stock. Maybe not have been the best choice. Flex was the ticker where I was later stopped out, lost open profits. So closed open profits to finance the loss. Started the process again, now 10% invested on 4 stocks. Kind opinion on process. Well, I like what you described in terms of 10% invested. Again, like we talked about, I think Monday and last week, it's just, you're never going to get good returns with that small of exposure. So I think you're being extremely cautious. I just wanted to, you didn't give the entry point on Flex, so wasn't 100% sure. I'm assuming maybe you were buying over here when we were talking about this name, or maybe in here. And this would not have been a situation I would have gotten heavy in a name like this, because if you look, and I'm pretty sure we talked about this, where I had said, this is, and Mark had said, this is running into supply on the left. So you would take a smaller position, on a low cheat like this, and then build into the position, if it improved. We didn't really get that right side. This just sort of, had the Hardaway crossover, it came sort of undercut, this area over here, and then just took off. So yeah, if I have a critique, it would be, I don't think this was definitely not the position or that really low risk spot where to get aggressive, at least in a name like this. Lou's asking, after a day like yesterday where it looks like it could be the start of a pullback, are you normally waiting a day or two before entering new positions? It's going to depend on the merchandise. If we have a pullback and there's lots of names breaking out today, I would be buying them. Well, it would be depend on the positions and then how a breakout's been working. So given the environment I've been having, where starting to really see better action, absolutely, I'm a buyer of good merchandise at this point. I'm not going to let the general market or fears over, maybe this is going to turn into a 5% pullback or a 10% correction. Well, then I'll just let the stock stop me out. The stocks have the first and last word every time. Tim is asking, what level of profits, both banked and open, had you made to make you comfortable with being fully invested? I'd only gotten up to 30% invested with 1.2% portfolio profit, which was all open. I don't know, Brandon, how would you answer that? I would say it was a combination of both open profits and a few, booked a few profits as well, and just sort of leaning on the combination. But I don't think of it in terms of, do I have 3%, in open profit? I think of it in terms of, are the names that I've bought acting well? Are they continuing to follow through? And am I feeling any pressure anywhere? And then do I have gains, some to lean on, whether they're open or closed? In each case, the answer, asking myself those questions was yes in each one. So you just continue adding.
Yeah, there's not really much to add there. I mean, listen, I think, when you start seeing your account appreciate, 1 to 2% every, few days. I think at one point we were up 5%. And I mean, but we didn't even look at that. We was more or less to what Marky said. It was the action we were getting from the positions we had on, the continued merchandise that was coming up on focus list. And then just watching all the breakouts, stuff was moving. Even the stuff we weren't buying was moving. So.
Greg is saying, do you apply the same power play rules, saying like on a crypto name? I would, certainly. And like Mark even talks about, supply and demand is not, it's time agnostic, it's asset class agnostic. So it's the same skill set. If something's explosive in in another market, it's supply and demand. If there's no sellers, I would tend to treat it the same. James is saying, what sort of defensive actions, if any, have you taken recently on your holdings? Exactly what we've described, guys. It's funny that obviously there's a number of you that, the pullback has got you either nervous or, thinking that, I don't know, the market's going to come in hard. And if that happens, you let the stocks and the positions stop you out one at a time. That's what the stops are for. Well, as Mark has often said, or we say, you use strength. Pros use strength for selling. Why? Because it reduces your overall volatility. And when names get extended, is when you're most vulnerable. So that's precisely why you trim when things get extended. And so that's precisely sort of what we did. We just went position by position, stock by stock, and did some math. You can just run the math too, guys, and say, how much pullback am I willing to sit through? And then you run through your positions and how extended they are and ask yourself, am I comfortable with that? If you are, then you sit. If you're not, you trim. Again, assuming that the positions themselves are, up and, at logical spots to, if you look at everywhere we've done this in terms of the platform, it all, a name like Booking, this made sense, into this run to trim a little bit, because you're at a multiple of your initial risk, and the stock is short-term extended, but it's acting very well. I want to be really clear too. If you're going to hold, trade some of these for a bigger swing move, you're going to have to potentially sit through pullbacks. So that's the whole idea of sacrifice. We talked about this on Monday. There was a good rant on it. Mark mentioned it in the note earlier in the week. So yeah, you just kind of have to figure out what kind of trader you are as well. Don's asking about Monday stock, that is. Look at the breakout on 1214 appears to be failing. Do you see any weakness in the base that would be a reason to not have bought the breakout? Yeah, this is a name I sort of had on another watch list. What I don't like about the breakout is that it gapped. So I'm not sure. I like, and it was a little short. So listen, the shorter it is, the less likely I am to even chase a gap. And as I've talked about, I don't chase gaps generally at all. But let's say this was really tight. You could play this on the gap, so long as it doesn't, say go too far above the pivot. But Right now, it looks like it's just pulling back to that area. So if I was in it, I wouldn't be doing anything at this point. Michael's saying, MR, did you short anything? Did you do anything differently than MM? To be clear, guys, I don't know what Mark is like. Like we don't have like direct lines of communication like wired into each other's skulls or anything where it's like we're just constantly doing the same things. In fact, there are times he's getting really aggressive in certain positions that I don't even own or I'm not watching. We're our own operators here. Now, in terms of shorting, we did put on a short in the Dow as well, and actually added to it a little bit today. So I'll tell you how we handled it. And actually, I would have been more aggressive yesterday, and I was actually on a call and wasn't quite as on top of it as I even probably should have been, or aggressive, I should say. I was thinking yesterday, if we sort of go outside on the day, maybe that's the sign that we're short-term topping. So I didn't put on quite as much as I wanted. Then today, when we gapped up and started to roll over intraday, that's when I added. But I want to be clear. If you want my advice on shorting, you're not going to, I'm not saying you won't make some money, but you're not going to do near as well, because shorting is not my forte. For some quick bites here and there, I'll occasionally do some shorting. So, and as far as doing anything differently than Mark, I already covered that. Nicholas is asking about Pro. Bought on 12/12 and on 12/19. Comments on the entry. Let's see, 12/12. Okay, so you bought the pullback buy. And 12, I'm guessing you bumped it maybe right here. Yeah, so it looks, the first question, I like the pullback buy. You could have bought the stock here, where I probably would have started a position here, maybe add through this level as it's sort of coming through and turning higher. And then, okay, you didn't buy that. It pulls back to the breakout. You get that nice support on, let's see, 1, 2, 3, 4. Yeah, that sort of fifth day. This is where it's go time. In my opinion, if I had bought the pullback buy, I would have put my stop probably right at this low, thinking, now we're going to be making 6 lower lows. This is, the stock needs to get going. And here's what I also like, see how the volume during that pullback just came down the whole way. So you're getting that, high volume out, low volume in, which is good. I don't like, this is a little bit of a stretch, but for aggressive, if you're going to be aggressive, I would have just been really tight here. If it just didn't go, probably would have just turned around and sold those shares. So that would be my critique. But I do like the pullback buy. I think you did that properly. The add-on, and if I was gonna add on this day, I probably would have only incrementally added. Like I certainly wouldn't have gotten aggressive. It's too short.
Yeah, and I actually covered this in the stock analysis over the weekend, which I don't know if you saw, but yeah, I'm looking forward to kind of set up here on the right, to set up a right side here. So keep it on watch. It might still do that, and then maybe once it clears that 40 area, if it's more well defined, it could really start to go.
Sorry here. BHVN is the next question. From Andrew saying, is yesterday's price action problematic given that volatility widened, or is it supportive? Or is it supportive action on good volume a positive? Well, you could certainly, look at the stock's extended. So you could use yesterday's low. I do like, it had a good close. You're right. So it does look like some potential supportive volume came in. Look, when a stock is extended like this is where you just you got to, if you're going to play it for a bigger move, you have to, sort of draw a line in the sand to say either how much am I willing to give back, or do I just switch over to something like, a 50-day break even or better? But you realize that, the distance between, the 50 days down here at 31 and the stock's up here at 38. So you're looking at a 20% pullback in the name, and it'd still be acting normal before it potentially stops you out. If I was trailing the name, I think you could probably, move it up to yesterday's low. But just know if you're trying to play it for an even bigger move, you might get clipped. This is where as I've talked about, I kind of like going in either way, meaning be really tight or loose, rather than sort of giving up the middle. Or you do some type of a blend, and that's where I like you de-risk the trade to the point you're willing to hang on for a bigger move. But this is where, again, it's your trade, guys. You gotta kind of ask yourself, if you're happy with the profit. I would have taken it, when the platform was, saying to potentially, be reducing up in here into this strength. If you held it, I think yesterday's low is at least maybe a potential key low in the near term. Shane is saying he enjoyed Mark's podcast on IBD. Dan is saying I have a few positions with 2 to 5% gains. If we expect the general market to retreat some because of overall conditions, should we be raising stops to break even for positions that don't have substantial gains yet, or should we hold steady with our normal stops? Making sure 2 positions with 5% gains. Well, listen, sort of like I talked about with the MMYT, this is one of those situations where you have to make that determination. Certainly, if, let's say, we're in a situation where you've had a really good run and you're willing to say, I don't want to give any profits back, and there's nothing wrong with moving stops to break even. Or you do that on partial positions. We do that all the time. So I think you gotta kind of look at each stock again individually. But at this point, the market's been really strong. I want to try and give stocks the benefit of the doubt. So it's something.
I'll just add too, take a look at your overall portfolio, and if you're going to be okay with, giving those gains back, or holding them to stops with the risk that entails, that's the question you should be asking. Are you okay with that? If not, then you need to tighten up.
Sorry, guys, having some trouble finding my mute button here. This toolbar disappears on me from time to time. Anish is asking, can you give me some insight on level 2 bid and ask during the breakout point? Does it get wide or loose? Just want some insights. I don't even subscribe to level 2, guys. So that should give you an idea of, how much weight or credence I put on the level 2. I do sit and watch the bid ask spread in terms of, I'd like to see the bid moving up. So yeah, I don't want to get overly, into the weeds and sort of bid ask spread stuff, but normally, I'm the one, as the stock is moving, I'm hitting the offer. I'm not going bid for a name, and I like to see, when the stock is ready to break out, especially, we're talking about maybe a little spreadier situation. You want to see that bid, moving up. So if the stock is, a little wider, maybe it's only 30 cents wide, still a little bit spready, and the bid in the pivot's 45. I want to see, that next bid come up to where that pivot level is, meaning that someone is a willing buyer, sort of, beyond that point. Eric is asking about what is the ants sell rule. I thought I bought Crowd on 1026 and it exhibited ants characteristics. Well, there is no ants sell rule. Ants, and for those who aren't aware, let's just make sure. Exhibit on 1026. This is one of the things I would have on Monalert for any name you sort of have. So he was saying 1, 2. Yes, this does look like an ants. It means it's up 12 or 15 days, more than 20%, and a 20% increase in volume. In this area, the one thing I would say, it doesn't look like it has the volume, but maybe over in this area here, definitely looks like a potential ants. It is showing you that this stock is exhibiting. This was created by David Ryan, William O'Neill, as a characteristic of stock that's under strong institutional accumulation. So if you're certainly more of a swing type player wanting to play positions for a bigger move, ants is telling you that that's a potential name you want to hang on to, or at least that the market is telling you that is potentially a position that you want to try and play a piece for a bigger move, because it's so strong. Now, in terms of, certain sell rules, this is where I would encourage you, if you want to play names like this for a bigger move, you move over to that backstop extended type recipe on Monalert, where it's just going to help you monitor the name, and you use some type of a double negative confirmation, where either goes on selling pressure and you get a close below the 50, or it gets really, really extended. This is where you can use you can use the backstop big move, which will just help you stay in a name like this and play it for a bigger move. Keep in mind, it's going to use the 50. So you're going to have a decent amount of ground between, say, like where the stock is now in the 50s. Another one's about 20% above the 50. And that's where using the extended in combination can help you, as it gets really extended versus its own price history. That's where you can leak out some shares and trade around the position. And that's precisely, how we like to use it, and how I use that recipe. That's one we use. Michael saying, should we rather buy laggards when they set up, or wait for leaders to form a new base, which would take months? The latter, Michael. I don't ever generally want to buy laggards. If it's a true laggard, I don't really want to own it. So yeah, I would rather wait for the better merchandise. Then that's. I'm trying to come up with a good analogy, but it's, do you want the best players on your team? Would you rather wait for a good player to be available, or find lousy players? That's kind of how I think about it. Luke is saying he bought GE on November 16th. Can you evaluate the buy? November 16th, excuse me. Okay, right here. Looking at this now, it looks like, okay, it kind of worked out, but this stock just wedged its way up. It's also, speaking of potential laggards, it does have some decent fundamentals on the table. Yeah, this is a situation where, speaking of, I would much rather, in a situation like this, I definitely would not have chased this up here. There's no pivot really, and this is just sort of wedged its way up. So yeah, I don't really, if I was going to play this, I'd be more likely to have been, playing it here, or maybe even something like here, where you just kind of drifts back, similar to how we played the home builders, similar to how we played Booking, and some of those names where you got sort of those short drifting handles as the market paused, a number of the stronger names drifted back. But yeah, your initial buy point, there was no real pivot there. It was just sort of making new highs, so you're buying the stock. Glenn is asking, does it make sense to evaluate a VCP on a weekly chart in addition to the daily? Yeah, absolutely. I always have both charts up. Trading off the daily, but I'm looking at the daily and the weekly. And yeah, you want to see those contractions, left to right in the same idea. To be clear though, I want both to look good in order for a trade. So it's not, I could like the weekly, but if the daily doesn't look good, I'm not trading it. Kyle's saying, what exactly happened yesterday afternoon with the market sell-off, in your opinion? I know pullbacks are normal, but felt a little violent. Look, the sort of smart aleck response is there were more sellers than buyers. Kyle, I don't know what else. We don't have a crystal ball, and there was nothing abnormal though. This market's been very extended. My guess is, yeah. Did you have people taking profits? Sure. You probably had other people a lot of people have been trying to short this market. They keep getting run over. So it's just, a classic example of an overbought market that just started to pull back. That's all. Estuardo is saying, any group theme both of you see emerging, potential leaders? Brandon, any thoughts there?
Yeah, good question. Nothing's popping out at me right now. It's, again, like I more look at like what's holding up that has good relative strength. Is really what I'm looking at right now.
Yeah, I mean, look, in terms of general themes in the market, yeah, sure. Look, the software names have held up, or have acted really well. The software security area in particular has been really strong. Obviously, AI has been a big theme people have been talking about all year. So if those what you mean, those are some of your clear, leader type areas. We'll go a few more minutes here, guys, because we'll go 12:15 since we didn't get to as many questions right at the beginning. Spencer's asking, how long do you give a stock like EME that has been basically treading water for a month or so after initial purchase? Well, if the violations aren't piling up, here now it's leaking off a little bit, but it looks like it's still just potentially putting in a right-hand side. And this was another one, when it was bought, we were sort of saying, look, you're running into some supply here. This may need more time on the right. Well, it has. I would have liked to see this stock, coming out of this little area, really get going a little bit more. So yeah, it looks a little more laggardy at this point. But if you've been in it the whole time, I would either stick with the original stop, or I think the stop, potentially moved up to this low 20. Where's the current stop on this one, Brandon? 209.60 area. On a related note, when thinking about names to potentially reduce or exit de-risk as the market's gotten extended, do you exit this type of a name? That's a good question. The answer is sometimes yes. So this is where, to a bunch of the prior comments and questions about, the market's pulling back and how do we de-risk? And I would much prefer if I have 3 names, and I feel like I'm carrying too much risk, or maybe I'm feeling a little more pressure than I want. I would prefer, if I don't have, let's say I've got a name like this, and then I've got 2 names, maybe I'm up mid-single digits, 5-6%. I'd much prefer to cut this one, because it's not acting as well. While the name that has already broken out and I'm showing profits in is more likely, to act well. Or then, to move into new high ground. This stock isn't even in new high ground. It hasn't been able to get there yet. So yeah, I always want to favor the stronger names.
Yeah, I'll just add one thing, Marky, on this EME. Spencer, too, you could step aside this and it's still, if it holds up, it's still got a pivot that's totally reasonable. So you could just add it back. So step aside now and then add it back if it reemerges. We do that quite, sometimes.
That's a really good point. You can I've never been, this is sort of a little more on the philosophical side, but it's never bothered me to sell a position, because I always have a plan to get back in. So, you can always trim as well, but just have a plan for how to add those shares back. What do you need to see? How does the stock need to act? And just be asking yourself, well, what do I need to see in order to add these shares back? Or, if the stock then tightens up and moves back higher, like, Brandon was saying, that's precisely, learning that trading is not an all or nothing business. It's an incremental business, and making good incremental decisions is really what puts, some people way ahead of others in this game in the long run. Diego's saying, do you adjust the dollar value for new trades as your account equity changes week after week? Week 1 full position is 25K, but 6 weeks later it could be 30K. Assuming you're doing well, certainly. Yeah, you can continue to use the increase in the account size to increase your position size. That's exactly how we do it. We tend to do it sort of like in tranches. So when we're up a certain percentage, then we'll sort of kind of re-level things. But I know people that do it, on a trade by trade basis. Either one's fine. Bill is asking, Mark, when you used margin in 2020, how much leverage did you use to get a 300+% return? Can you give some simple math example of you using margin on a 10% winner, how much bigger it made that winner percentage wise? And what was your max position? Okay. The first comment I'll make is what you're describing is not how I think about margin at all. Meaning to say, well, if I go on margin, I can make a 10% winner that much bigger. I'm using margin because there's just more ideas and I want to buy more stocks. So let's say a good example would be right where we are right now. If we get a bunch more ideas and I'm back up to, say 100% invested, I'm not sitting there going, am I at 105? I'm at 110. I'm buying the next name, and I'm buying the name after that. And I'm buying the name after that. If I'm getting aggressive, I'm not saying it's almost like my head is down and I'm focused on the trades. I'm not sitting there going, what's my exact margin rate right now? And I know I've said this before, but literally there have been times where it's just I bought and then I tried to buy and the broker won't let me buy anymore. And I'm like, holy smokes, I didn't realize that I was that long because things are working that well. Now, in terms of, maximum position size, in the 2020 market, I don't think we ever went above 30%.
Yeah, that's what I was gonna say, 30%. And but what's funny is we got to that and we got to it quickly and we just stayed there. And that's where that return came from. We just stayed at the max position sizes for a while. And we just, to Marky's point, we just kept buying and buying.
And this is, we've used that sports analogy all the time, but it's, if they keep throwing you fastballs over the middle of the plate and you're driving them over the wall, you're going to stop swinging at them? No, you're just going to keep swinging at them. And that's exactly what was happening. We were putting, bat to ball repeatedly. So you just stay on it. And there are times where that happens where in very short order, you're trading small again because is it CAMT starting to move here? Bring that up. I was actually looking at this morning. It's a little bit wide here, but this is definitely viable. If you don't own the name already and acting, pretty well. It did gap a little bit today. I also don't like that it's up 6%. But yeah, this is a situation where if I own the name, I might add a little bit on a day like today. It's not perfect, but acting well. Let's do one or two more here. What is a cash index? Alexander's asking. Is that the Dow index? Yes. It's just, remember that the index, the Dow index itself is the cash value of the Dow components, but it's not tradable. And that's what the DIA and the futures and the other instruments are based upon that index. So Mark is saying he wants the index to confirm, that the actual cash value of the components, say above his stop level. So he sort of uses that in combination. David's saying the S&P and the QQQ are also extended. How did you pick the DIA? Less volatile? No. Mark discussed this as well. I think initially he was saying, look, if you're going to short the indexes, he wants to short the weak one. And, the day initially when he was shorting, I think that was the weakest of the indexes. Yesterday, I think it was sort of a little bit of a toss up. But yeah, the DIA has actually been, or as the market was sort of pausing, and when we put the first one on, Brandon, I want to say maybe last week or that was the one sort of weakest on the session. But look, if you wanted to short one of the other ones, I'm not saying most likely that the Russell's been the one that's been different, but say between the Qs, the SPY and the DIA, most likely they're gonna move in concert here. For some of us who are not familiar with trading the indexes, can you explain? I think we've covered that enough. Listen, the biggest thing or takeaway, even Mark and I rarely even talk about shorting indexes and that kind of stuff because it's not something we do very often. But it's interesting, even listening. If you were listening to this on a replay, what he described in the first 10 minutes is almost exactly how we treat the indexes if or when we trade them. And the idea being is there's tremendous liquidity. So to Mark's point is you can have an enormous amount of control. That means you can take a really big position. Now, obviously, your timing has to be really good. But, in Mark's case, it sounds the way he was talking, he's sometimes takes very large positions. Well, why? Because there's that liquidity and there's that control. So it's the same idea, though. It's a risk reward setup. So I think combined, even if we get stopped on this one, I think the net loss is going to be something like 2% on 3 trades. So if you catch even a 4% pullback in the market, it more than pays, for all of them. And the idea of this business, guys, is really about compounding good risk versus reward decisions and doing it over and over and over again. I'm amazed at the number of people that, they buy something, they don't even have a stop or anything in mind in terms of where they're going to be right or wrong. And then they wonder why their performance is terrible because they're not making good risk versus reward decisions that stand on their own and doing it again and again and again. They're just buying something or shorting something because, well, I just wanted to do it, or it was overbought or oversold without a plan. right, last one. I don't want to end on a rant. How many trades on average do you aim to take per year based on your goals? Based on RBF calculator, it seems that trading a lot is very necessary to achieve super performance. Yeah, I don't think about it that way. I want to trade as many times as possible, meaning as many that's set up. The RBF calculator is just, there as an exercise to put in your numbers and understanding based on your position sizing, how many trades are you going to need to potentially get to your goal. There'll be years where, there might not be that many opportunities. This year's been a good example. We haven't had many really till recently. We've probably done more trades in the last 4 weeks than we did in the entirety of the year. We did some over the summer and didn't make a whole lot of progress. So in a really busy year, 400 or 500. In a not so busy year, might only be 20 to 30. So all right, guys, we're going to wrap there. I know we didn't get to everybody's questions, but I think this is overall, good covering the general market. We will see everyone back in the trading room, not on Monday. Obviously, it is that's Christmas, so Merry Christmas to everyone who's celebrating that holiday. Hope everybody has a really good holiday. I'm assuming we'll have that on Tuesday, but yeah, be monitoring the platform for updates. And everybody have yourself a really safe and great holiday.
Yeah, Merry Christmas and happy holidays. We'll talk to you guys next week.